Hey, this is Justin with DaytradeTheMarkets.com. It is Wednesday, the 19th of March. It's FOMC Fed meeting day today, and I wanted to do a quick recap about that. And if you happen to see the videos we did Monday or Tuesday, we talked about how you can combine the bigger picture analysis with the shorter term structure or aggression that's in the market with our software to really help you make better sense of what's going on. So I wanted to piggyback on those two videos again. And if you recall from yesterday's video, if you happen to see that, we were talking about that we thought the market would be pretty slow. And again, let me just backtrack here. I've just got the last 2 hours of trading, basically the FOMC moment, post-FOMC meeting market action. Prior to that was a pretty slow day, and we basically were looking at this area between 67 and 59, which is right in here, as kind of a guidepost as to what to expect going forward. And in the overnight and for the first 2/3 of the day, that's where the market stayed. And by the way, I've also taken off everything on this chart except for just these aggression bars. So I've got the bigger picture levels here around 67 and then 59 and then 55 then 46 that we want to monitor. But I've taken off the filter at the bottom. I've taken off the support resistance zones. I've taken off the decelerations, taken off the high velocity moves, just so we get a better feel for the aggression bars and what they're showing us. And just as a quick review here, relative aggression bars, as we call them, are really the crux of what we're looking at. We want to see what's going on under the surface of the market. We don't just want to look at past time technical analysis. We don't want to just look at price action. We want to see what's going on. We instead of just looking at the at a car and which way it's going, we want to look at the brake pedal and the gas pedal, so to speak. Okay, and that's what this software is telling you. So we've got level 1, level 2, and level 3 aggression bars, and we especially want to focus in on these level 2 strong and level 3 extreme aggression bars, both buying and selling bars, because that's telling us within the order flow which side, buyers or sellers, is more aggressive cumulatively, collectively within the market, because that information right there is going to give us a pretty good roadmap to the short-term direction of the market. And when you combine that with the bigger picture market analysis that we do each night, it can give you a much better edge. So again, that's all I've got on the chart here is just the bigger picture levels and the aggression bars. And again, heading into the overnight and to the regular trading hours, we expected the market to stick in that range, and that's basically what it did. And then as soon as the FOMC came out, we were up near that 67 level, and you could see some strong selling came in and then some extreme selling came in, and we tested right down here to this 59.50 area, at which time we had about a 5-point bounce. Doesn't look like it in the scheme of this large market activity, but a pretty nice 5-point bounce right off of the 59.50. Then we tested again and had more extreme selling that came in, 2 of them in fact, until we tested down here into this 55.50 area. Now at that point you can see some buying reaction did occur, and some level 2 strong buying came in, and we actually rallied from that 55 area about 9 points from there to there. And then you can see this market pretty much coiled for the next hour or so in this range. We were actually doing a live session today, and what we were looking at, again, was we really wanted to monitor what happens at each of these levels between, again, going into the day, the 67 and the 59. And then you can see we bounced up, sold off again, had another bounce here. But what was really interesting is when the market closed like that, we're trying to find some kind of reference to look at. And you can see this is what we call excess off of this 1-minute bar here. You can see there's just a lot of white space where the market made a new low compared to the prior bar and then had a really strong buying reaction right in there. Similar situation happened right in here and even right in here. So we're looking at that when this market really tightened in as potentially areas that we wanted to monitor to see. In other words, this market had found some buying off of the low, and it had found some selling off of these highs. And our thinking was at the time, if this market could go and test one way or the other, and do so with some strong aggression, either here or here, the other side's probably going to throw in the towel, and we could be setting up for a pretty nice move. And that's exactly what happened, where we had this level 3 or extreme selling aggression that came in, and then strong selling aggression on the lows, more extreme selling aggression, all the way down here to this next level of 46. We actually bled over by 4 points, but then we had a really strong buying reaction off of this, and you can see that we only took, while we bled over about 4 points, we were only below that 46 for 2 minutes. This is a 1-minute bar. There were only 2 bars that were below there, and again, we had really strong excess off of this 1-minute bar. Okay, and then you can see strong buying came in again, and we got right back above 46 and traversed all the way back up to 55. So, so again, a very interesting day. What did it tell us big picture? As long as this market can hold above this 46 area overnight and into tomorrow, these bulls might be ready to take another shot at it, but we want to certainly monitor between 46 and up here at 67, bigger picture. Otherwise, we just want to be pretty nimble with our trades and monitor for really strong aggression one way or the other, like we saw here. And then when the buyers came in here, or when the selling wave came in here and the buyers came in there. So that's, again, the way we try to look at things, is try to put the market in context, bigger picture, and then look at what the shorter term aggression is telling us to help us, stay on the right side of the market more often, which is really the key. So hopefully that made sense. If you have any questions, by all means, let us know, and we'll talk to you soon.